Okay, yes, just welcome everyone today to the webinar, Clean Energy Credit Union with Terri Mickelsen, Emerging Lessons from Lending for Retrofit from the United States. Just a little bit about the format of the webinar to begin with. Everyone's in as a viewer, or many people in as a viewer. What we're going to do is going to escalate people so they're able to join as contributors. That means you'll be able to chat and what have you, but please do make sure that you're muted. We'll mute you if you don't, mute yourself, and if we have to, we'll remove you. we don't want to do that. So yes, today's webinar, a little bit of housekeeping. It's an hour-long webinar, and we're going to be learning about retrofit and lending from a US context. The context obviously is American, but there's a lot of resonance and relevance to what's going on in the UK at the moment, and indeed the EU. Please do mute. We'll have a presentation and then a Q&A, chance for Q&A, 10-15 minutes at the end. Please do use the chat function to ask questions. As I said, I'll have to make people, or we will make people contributors to do that, so please remain muted. And the session will be recorded and slides will be circulated, so no need to ask about that. And this session is part of the Green Home Finance Accelerator, a UK government programme, which is around designing, developing and piloting a range of finance mechanisms to encourage retrofit, energy efficiency and associated measures in the UK. Very quickly to introduce myself, I'm Jonathan Atkinson. I'm Business Director at Powered Retrofit. We are a one-stop shop for retrofit and energy efficiency based in Greater Manchester. We operate across the Northwest for members, householder members and clients. We also operate supply chain training and also replication services, and we work with other organisations across the UK and Europe. The project that we're looking at the moment is a 6-month project as part of the Green Homes Finance Accelerator project, and it's around how we can integrate finance as a kind of key mechanism as part of this one-stop shop. As a colleague mentioned recently, if retrofit is a one-stop shop, then finance is at that shop, and our particular focus is on credit unions, which are locally based, as we are, and are ethically motivated, and not-for-profit cooperatives, as we are as well. So we think there's a really good fit there. And our recent research involved looking at exemplars around the world, in fact. And we visited Ireland and saw some fascinating case studies there of one-stop shop delivery and also finance and credit union involvement. And just to flag that we'll have some learning to share there at a future webinar and a blog post that we'll be issuing soon. But part of that research also looked at a worldwide context, and my colleague Debbie went to, Debbie from ABCUL, the Association of Credit Unions in the UK, went out to Memphis and was involved in a fascinating conference there with a whole range of kind of lending mechanisms. But one of them focused in particular on lending for refurbishment and retrofit in the US. And Terri Mickelsen from Clean Energy Credit Union was a presenter there, and we were really struck by the work that they're doing and the learning and all sorts of aspects of what they're doing. Obviously the context is slightly different, and Terri will expand on that a little bit, but we do think there's huge amounts of learning to begin from hearing about Terri's experience and her credit union, and indeed we can explore that as we go on. But I think you have to keep that in mind, that there is a particular context there with the Inflation Reduction Act and other things that are going on. So some things are relevant, some things are less relevant, but there's always room for learning, and indeed that's why we're here. So I am going to stop presenting and I will hand over to Terri, and if you're able to take it away.
All right, let me get my presentation up. I think I'm sharing. Let's see, am I sharing? All right, is the screen up? Am I good?
We have a bit of an infinity mirror thing at the moment. I think you're sharing your window, but not your presentation.
All right, let's See, it was working. Just
I know, we were looking at it just recently.
let's try this again. No.
No.
Let me try and let's try that.
That's it. Perfect.
All
Thanks,
right.
Terri.
Well, thank you. You know, I appreciate everyone coming in today, and thank the People Power Retrofit for having me present with you today. I get to talk about two of my favorite subjects, which is clean energy and credit unions. So this is always a lot of fun for me to do. So as he mentioned, I am Terri Mickelsen, Clean Energy Credit Union CEO. I have been working in credit unions since 1986, mostly in New Mexico, but has moved over to Colorado in 2016, where I ran across this small credit union that was a startup, and we will talk a little bit more about Clean Energy Credit Union. We started in 2017, we got our charter, and we did our first loan in 2018, all those many years ago. In that time, we have, and we'll show you our growth that we've done, but we are at 8,500 members, and we've just really been very fortunate to be in this market at this time. The reason why we're here, of course, is our mission to promote clean energy and our cooperative principles of a credit union. And as it says here, our vision is a world where everyone can participate in the clean energy movement. Our founders and organizing committee was looking for a way to make financing more affordable. The contractors here, we're really working more with fintech companies that were charging very large fees for the projects that were being put on, the solar, HVAC, geothermal systems. And what they wanted to find was a way to reduce the cost of the project without having to pass through these higher costs to make it more affordable to the everyday consumer. So that's kind of where we started and why we started. And we really feel that clean energy and this cooperative principle was a natural fit. Credit unions, as we mentioned, are about people over profit, and really putting together that good financing and trying to offer low cost and offering loans to people who may not be able to get them at a normal financial institution. So we look a little bit deeper at our members than just an algorithm. We really go in and try to work with our members to make this loan affordable and to get them set up with a loan. There's really a need to be part of the clean energy movement, and we know that it's not easy. Some of these systems for solar are expensive, same with HVAC units and geothermal systems. We know that renters are having a hard time getting into this movement as well. So a lot of the community solar projects are nice for them. We do also lend for e-bikes, which have been real popular, and we do some lending on the EV auto side as well. Financing options, I mentioned that they can be very expensive. Some of the fintech lenders out there that were offering, and you'll see where it's like 1.99% financing, but what was happening is that there is something called dealer fees, and they would add them on to the project. So it seems that they're getting a great deal, but really on the other end, they're being charged more for those projects. So it's just the financing is for a higher dollar amount. So it really isn't a great savings for them. So it's more of a transparency when you have a credit union working with them, and we're able to upfront show them what the cost of that system is going to be and what their financing costs are going to be. So we feel that our credit union, because we are doing only lending for clean energy products, we also have a place for members who want to make deposits, and they can be part of that clean energy movement by being a member here of the credit union. So it's been a really great fit for a lot of our mission aligned and value aligned members. And we do want to mention that there's still, and I know that retrofit would probably be someone who's working towards this as well, as that education is really important, because a lot of people don't know how to access clean energy, to learn about it. It's still kind of foreign for a lot of consumers out there. So we do work on putting out a lot of education as well. Where we are today is in 2018, I said that we had our first clean energy loans. Since then, we've put on 11,000 loans. We have over $200 million of loans that have been given out, and we have $45 million in member deposits supporting that, that growth. And we estimate that we have 800,000 tons of carbon offset. So that is one of our numbers we really look at, is what is the impact that we are making with what we are doing. So it's the number that we promote. If you go on our website, we have a carbon calculator talking about if you put some deposits in, kind of what your carbon offset would be. So we really like to promote that piece of it, of kind of why we're doing what we're doing. So the loans that we have currently been focusing on, of course, is our solar loans are the ones that we started with primarily. And we've moved on to our geothermal and heat pump loans, green home improvement, which can be anything from windows to insulation, doors. We have a lot of people who are rebuilding their homes that have been victims of fires and floods, and they're making their homes a little bit more energy improvement by different building materials as well. And we do also have some clean energy type roofs and that are friendly that we've done. Of course, EV vehicles, which have become more and more popular. When we started lending for these EV vehicles, I think there was Tesla. And now there's so many different choices. It's really nice to see that there's more EV vehicles out there. And we are going to start a program to bring more used EV vehicles out there as well, and our electric bike loans. So our impact on the events on energy usage, that we know that it's just been a pretty brutal summer. Out in Houston here in the States, we've had over 100 days in July it's just been it's over 100 degrees in days in July, and it's going into August as well. And they are just sweltering. I was talking before the program about my family that lives in Arizona, and they said it's been like 118 degrees there for he said it just is not cooling down. And these are just uncommon temperatures that are happening. And with that, in some areas, I mean, in Arizona, they're probably used to the higher temperatures, but in other areas of the country, they're not. And I understand that in your area, the heat waves have hit extreme numbers as well, and record temperatures. And there's not the homes that were built and that we even have here in the States. Some of them aren't made for, don't have HVAC systems. I lived in California when I was younger, and we lived in the Bay Area, and we didn't have an HVAC system in our home. We didn't need it. But now most of the homes have them because you just can't survive a summer without them and a kind of comfort. So along with the other thing is our rising energy prices. And the prices continue to rise. I know there's lots of things going out over in the Ukraine and that have caused energy prices to spike again. And it's just not going down, and it's going up, and it's becoming very unaffordable. And I know that there's something called fuel poverty, and it's becoming more and more evident as prices continue to go up, home prices go up, that people have to make choices every day because of those rising energy costs. So the opportunities for green lending, we did learn quite a bit about the UK and what you have going on over there. I think we kind of sometimes stay isolated in what we're doing here in the States. And it was very, very interesting to understand that, that only 5% of your homes have air conditioning. I thought that was pretty amazing. So there is a lot of room for you to grow in this area. And we understand that not everyone can just install an air conditioner in their home, but there are ways to put either cooling systems on or just making the homes more efficient. We do some programs for insulation and windows and, of course, drought proofing. And we always like to talk about our solar PV systems as well as a way to produce electricity at a more affordable cost. But there are things that have to be put in place before someone is solar ready as well. And that's where the green home improvements come in. As of 2023, 45% of homeowners in the UK said they're looking to make their homes more environmentally friendly and energy efficient. So, always the one thing that everyone has in common is they do want to save money. I always mention that not everyone is a tree hugger, but a lot of, everyone wants to save money in some way. And we want to reduce that carbon footprint. We know that governments are looking to meet their goals as well. There's a lot of goals out there that our government has in our different states in the US. And that, going net zero at one point is what, what they look to do. Even little, little things that you can do in the home, like switching to a low carbon water heater, is one of the biggest things that can reduce that energy usage, and sometimes up to 50% is what someone's spending now heating their water. So it's nice to be able to go and look. We work with some states and cities that do what they call energy audits, and they will come into the home and give them a list of items that they can do. Sometimes they bring these, like, I think they're called heat guns, that they go in and they show where all the drafts are and what they can do to save the most money. And then they partner with, some contractors, and then they partner, kind of with us. So we'll talk a little bit more about how that works. But loans can really help with that upfront cost, because we know that as things get more expensive, it's harder and harder to have that money in savings and just to go out and spend $10,000, $15,000 on something for your home that you need. So that's why the loans can really help out in this area. And we're going to talk a little bit about what we learned, because we've been doing this. God, it's only been 5 years, but we've made a lot of changes since we started. I mean, we started and we were really just trying to get out there and make a difference and try to help out. And we learned that you can't help everyone at the same time. So we really had to work on limiting what we do to make sure that we're delivering the best service. But one thing we really learned is people power retrofit, partnerships are so crucial. We have a field of membership that we bring in. Every credit union does have a field of membership. Ours is really values-based. So we have a lot of people that are in the energy sector, people that are looking at renewables, Solar United Neighbors, and we have many more that we have brought in. We've also partnered with a lot of nonprofits. So Inclusive is one, and they're the ones that put on the conference that I was at. And we have worked with them. We didn't have them when we started, and I wish we would have. I think we would have been a little bit further ahead. But with what we've learned, we've now partnered with Inclusive to help teach other credit unions to do this type of lending. And also, we work with them to advocate in Washington for building programs. And right now we're working on the greenhouse reduction, the greenhouse funding that they're giving out. So we can be part of that as well, so we can help more people. So it's been a really great partnership with them. Technicians for Sustainability is a solar company out in Arizona, but we've worked with them to build in some programs, one called the SERI program that's mentioned here. And what they have done is understanding that we have something called an ITC tax credit. That's 30% of the cost of a geothermal system or a solar system, that someone, when they do their taxes, they can take it off their what they owe in taxes. But if you don't make enough money to owe taxes, you don't qualify for that tax credit. So the SERI program is really there to kind of even the playing field, and they pay for a portion of the solar system for people who do not qualify otherwise and who would probably not get one. So with that tax credit, it makes it a little bit less affordable for someone who earns more money. That solar system costs them 30% less than someone who makes less money. So it just really doesn't even out so much. So we hope at some point it will be more of a tax credit and not a tax incentive. So more to come on that. The other thing that we do is we also partner with states. We partner with the state of Colorado. We're out in New York with NYSERDA, the state of Maryland, municipalities around, and also cooperatives such as Organic Valley, which has small farmers across the U.S. that we've done lending for. And what they do is they give us something that's called a loan loss reserve. And they put a portion of funds into an account, and that serves as a way that if the loan were to go delinquent or were to charge that off, that it would cover that loan. So for our credit union, what that does is it lowers our risk. So we are able to then discount the interest rate on that loan because we have less risk in that loan. It doesn't cover 100%, but usually up to 80%, which is pretty phenomenal. So that has really helped us in that partnership to get, they send their members to us, and then we are able to offer a lower loan rate. And we have a really special program that we're offering out of Maryland, which they are paying for their I guess their consumers interest for the entire first year of that loan. So we just bill them, and they send us funds for the interest. And so the person has no interest that they have to pay for the first year of the loan. And those are usually for installation projects. So they're lower dollar loans. They might be $3,000 to $5,000, but for someone who is in a, needs to save money, it really does help out quite a bit, and it makes it affordable. So I think that's been one of our really good projects that we've done. One thing we also learned is that you really want to have registered dealers, and you want to have, and what that is developing a relationship with a contractor, because credit unions are a little unique, where the person has to join the credit union to get a loan. And we have certain needs that we need when working with the contractors. We require them to have installed the project, or to partially have some of the equipment on site before we'll fund the loan. So there's different things that we require to make sure the homeowner is whole. And we also want to make sure that that contractor is going to be around afterwards, that they're not going to just put some solar systems on their property and never install them. So we want to make sure that we are working with dealers, what we call them dealers, but contractors that are solvent and that are doing amazing work and have good reputations. So that's why we have built a partnership. At first, we were really just starting out, and we found that this is a huge deal. And it makes it a better experience also for the contractor. So we're not having to teach them our loan products. We did build a what we call a dealer portal, which is they go in and they work with their consumer or customer at their home or over the phone, and then they send them a link to sign up for the loan. And then the contractor can go into the same link and also see how the project's progressing along. They can't see personal information, but they can see kind of where they are in the project. They can send notes back and forth to us, so they know when they're ready to go and install. So that's been definitely something crucial in communicating. Otherwise, they're calling on the phone all the time going, hey, is that loan ready? Or did they qualify? Or what happened? So having that dealer portal was pretty important to that relationship. And it saves our employees from having multiple phone calls all the time, and we're able to just get our work done. And, one thing, I think there's no one size fits all. Everyone has, and we've worked with credit unions to help them get their started, and we've done training with them. I've worked on the solar side and the green home improvement side, but some are probably, and you all and credit unions are probably doing this already, because some people are currently funding these projects, putting a new HVAC system on, a new water heater on, either by putting it on their credit card or doing a home loan against their home, or doing some other type of loan with you. But what we want to do is really market this as a green home product, so they know, oh, I don't have to put this on my card and pay a huge percentage rate. My credit union or my financial institution has a really great loan. They're working with my contractor already, and I can get this at a lower cost. So I think that that's something really important to do. And we're able to kind of pivot pretty quickly. We've added on a couple quick loan programs. We even had a member of our staff who had been part of a sustainability education piece, where college students are able to go out and do sustainability projects, but there's a cost to it. And so now we're going to be working with the Green program to do a loan for them, to allow for college students to go out and be part of the sustainability project. So it's been kind of fun just to be able to do that in a few months. So we do keep up with the industry, making sure that we know what's going on. And there's always new things coming up. So make sure that we navigate our situations, adding new programs. The IRA came out, which is our Inflation Reduction Act. And a few years ago, the tax credit was 26%, and it went to 30%. So we quickly moved some of our programs around to accommodate this, the new tax incentive. EV programs are coming out where they're going to be saving money on EV vehicles. So we'll be working to do something with that as well. And we're always keeping up on the industry, trying to figure out, is that going to be something going to the consumer, or is the car dealer going to take that off at the time that they're purchasing the car? So, and we've had to keep up with supply chain issues. This isn't as prevalent today as it was a few years ago, but there was a lot of people putting batteries on. In Texas, they had the grid problem where they were having the blackouts, and there was a huge surge in people putting batteries in their homes. And but there was a supply chain issues where it was taking months and months and months to get these batteries installed. So we had members that had applied for a loan almost a year ago who were finally getting things on, but we were able to kind of hold their loan and just kind of have them not have to completely reapply again, but able to work with them on their loan much later than we thought we were going to. The one thing that we really had to navigate this past year was all the rate changes, knowing how to quickly. It was hard. We had a lot of lessons learned there, because these type of the loans that we put on right now, when you start a loan, it's going to be months before the project's put on. And it could be weather related. It could be, as I said, supply chain. It could be that they may not have enough workers, or it might take longer to permit. There's sometimes they've applied for a solar loan, they've gone on to put the solar on their home, and their roof wasn't ready, or maybe their electrical work needed to be redone. So it could be months between the time that they apply and get approved to get that loan on. And we were guaranteeing those rates were much longer than probably we wanted to. And it wasn't a problem when the rates were the same, but when rates spiked at the end of last year, it hurt our bottom line quite a bit. So we've had to make some changes in our program to not maintain that loan approval rate for a very long period of time, that those have shorter cutoff times for the loan approvals. So that was a lesson learned. And but we're able to help out quite a few members, and we are now kind of on the upmend from the end of last year. So liquidity and demand, we built it and they came. We had so much demand. I think at one time we've actually had to stop contractors from being able to come in with us, because we had so many. We knew that we could only do really good work if we're able to manage the number of loans that we have coming in. Otherwise, it was just kind of getting a little out of control. So, which is why I was like, we don't mind sharing what we do with other credit unions and stuff, because there's enough demand out there for everyone. So that's why we do help out quite a bit. You have to have some kind of liquidity coming in to fund these loans, because these loan projects are not always like $2,000 loans. Some of these geothermal systems are in the $100,000. So as a small financial institution, there's only so many of those you can do, and we cap ours at $90,000. Our average loan is about $35,000. So that's about our average loan right now. So getting that access to liquidity was really very important to us. We sell some of our loans to other credit unions, what we call participations. So they buy our solar loans, which gives us more liquidity. Of course, bringing in deposits adds in more liquidity for us. So we've really had to make sure that we're managing that and keep a very close eye on liquidity. And we're working with Inclusive right now to kind of build an easier way for us to kind of, when we bring these loans on our books, to quickly sell them out in a participation to Inclusive, so then they can send them out to partnerships. We did find these participations to help other credit unions because they get to see our loan documents. They get to see kind of what we do behind the scenes a little bit. They get to really know this type of lending, and they can add this type of loan to their portfolio where it's a little bit different. These loans pay very well. Our delinquency rates are about less than 1%. I mean, we have our members tend to pay these loans before they pay other loans because I think they connect this to their homes. And most of our homeowners most of our borrowers are homeowners. They're not, these aren't unsecured loans in most cases. They are secured by the equipment, and we'll talk a little bit more about that later. So the incentives that we have right now are the Inflation Reduction Act. We have a lot of government policy. We have that 30% tax credit. Solar battery systems are now part of that tax credit, which they weren't before. We have rebates coming for households to install heat pumps and water heaters and household appliances. And we have tax credits for electric vehicles. They were limited by the manufacturer for a while, and they've kind of added more, and they've also added used cars to that as well. And they've also have more solar incentives for commercial and nonprofits, which they didn't have before. So it's really nice to see all the different programs that are being offered. One thing we did notice is, I think a lot of our, we would say our end of the year was just crazy busy every year that we had, but a lot of it was fueled by the end of these tax incentives. So these were supposed to end a few years ago, so people were clamoring to really get their solar installed before they ended. And we were just, really lots and lots of applications coming in through the summer. We've noticed that they've evened out a little bit. Doesn't seem to be the urgency because now they have 10 years. These tax incentives are now on for 10 years. So I think we're going to see it kind of normalize across, at least maybe in year 9, we'll see this happening again, or year 8 and 9 probably. But right now we're kind of seeing it leveling out, and it's not this big spike of applicants coming in. One thing that we really strive to do is to be knowledgeable, but not so knowledgeable that we're on the phone with our members and trying to be that expert. We want to be to offer enough information to get them started, give them links to areas where they can learn more. We're across the country, and every state has different programs. Every net metering is different in cities, and sometimes like in certain areas like in DC, net metering across the street is different. So you can even cross the street and have a different net metering program than on the other side of the street. So we know we can't be experts in every area, but there's ways to connect people to find their information. We do plan around the government programs that are out there, and we want to make sure that we are knowledgeable about what's going on in a government level, but sometimes in the state level, we can find out some programs, the states will come to us, but there's so many state and city programs going on. We can, only be experts in so many areas. And that's why we've developed some programs that complement some of the government programs as well, or rebates. And this is one of the ones that we did. This is something that we started out with. This was our first loan type that we had. So we did this especially for the tax credit. And so we did a 30% balloon loan for members that were looking to put solar on their home, where we wanted to make the loan payment as close to their utility bill or lower than their utility bill was our goal. So we have the 30% that's due in 18 months, which gives them time to file their taxes and get that rebate back. And then we have the 70%, which is going to be the loan that starts when the project is what we call energized, meaning that their solar is working. Because the other thing we didn't want is for them to have a high energy bill and then a solar loan bill in the same month. So we really wanted to make sure that we did not fund that loan, the 70% loan, until that home had solar on and it was working. So that is one area of that program. So that 30% kind of served as the down payment once the equipment was on site, and the 70% was to kind of replace or replicate their energy bill going forward. And the good and not so good outcomes are the federal incentive programs. You know, of course, it's going to save money. It does encourage clean energy usage, and it drives demand for that clean energy. And I did mention that credit's not for everyone. It's only for those who earn enough to have to pay taxes. We also found that new contractors and sellers, they flock to the market. Some with not enough experience to understand, some that, you know, they were just kind of going to where the money was. And I know there was a few financial or fintechs that have been in the news that they partnered with a contractor that went bankrupt, and they left a lot of consumers holding the bag. So that's why we really want to make sure that we partner with contractors that have been around for a while and that aren't just the fly-by-nights that are kind of in it because it's the thing to do. And sometimes the door-to-door salespeople can be misleading, and that's why we spend the time to look at every project that we put on. We have an entire area of our credit union that has knowledgeable people that have, some have worked in the solar industry, and they look at the project, and you know, you can kind of see if someone is going to qualify or not going to qualify for that tax credit, and maybe not offer them the type of loan which is expecting that tax credit to be paid. Also making sure that it seems reasonable, that they're not putting, you know, 30 solar panels on a 1,200 square foot home. And it is just things that look out of the norm, and making sure everything lines up for that member. So trying to give them a little bit more help. And that is the end of my presentation. I hope that you enjoyed it. And if you have any questions, I'd be happy to answer them for you.
Fantastic. If you have questions, I think we'll try putting hands up and I'll go through the hands. One thing, yeah, we need to highlight is, I think, it's a different context. It's an American context. There is incentives and tax credits where there aren't in the UK. For me, I think it offers a really interesting insight into what may be coming here. But obviously, Terri can't tell you when that will happen in the UK context. If I could abuse my position as facilitator, Terri, I'd like to ask you a couple of questions. I think one of our real interests is how you might combine advice with lending, and I'm interested in knowing whether you whether you advise your clients on what they should be doing, or do they come to you with a very clear idea? I want to install a heat pump. I'd like to access solar panels. And then secondly, do you follow up with them as well after the installation? So yeah, advice before, follow up after.
Well, what we try to do is, we're a small team. I will tell you, when we started in 2018, it was me, one other person, and a volunteer. So, and we put on, I mean, quite a few loans, and we've grown to, we're at about 35 employees. So we don't have the person power to really to do that. So we rely on our partners. Either nonprofits working with consumers, energy audits, the state and government agencies that are we're hoping that have gone out. So we a lot of information we put on there is go get an energy audit on your home. Most utility companies do that, and I don't know if that is comparable to what happens in the UK. Is bringing someone out to look at what you need in your home, and we always tell them get more than one quote. Please don't just go with the first person and the person knocking on your door. You know, make sure that you've had 2 or 3 different quotes from them, from a contractor, to make sure that's what you really need. So I think working with nonprofit, working with some of the energy audits, and then people just know, I mean, my HVAC unit went out and I needed, my water heater blew up in my garage. I have to have one. So sometimes it's an emergency need where I've had people say, I had one person was just, my HVAC system's out and it's 100 and some degrees in my house. And we need a new one. So it's, you know.
And then in terms of follow-up, do you follow up on performance, or to make sure that the installation has been satisfactory, or is that left to the householder?
Well, the installation part, part of our loan product is they don't sign off on it until it's installed. So it has to be working. So we make sure it's hooked to grid, is what we call on the solar, and the same with the geothermal system and the HVAC. They have to actually be installed to get that second part of the loan. So that's one thing. And I know our marketing department follows up with surveys. We'd love to hear from our members, but we currently do not have like a couple of years later survey, which I think it's something we'd love to do going forward. But we've only been in the industry for 5 years now.
Totally.
But every time I have a member reach out to me, I'm like, how's your solar system doing? Is it performing like you thought?
No, it's interesting. It's one of the things the UK government want us to look at. Is like, how do you follow up? How do you do that sort of stuff? You know, Phil, you've got a question. Are you able to unmute?
Yeah.
Great.
Thanks, Jonathan. Thank you very much, Terry. That was really brilliant, and it's good to hear this is happening. I particularly was interested by the idea of a two-level combo loan, because for me, that addresses the fact that for credit unions in the UK, a home energy loan is going to be one, higher in value, and two, longer term than the kind of loans that we usually make, and that is a significant risk factor for us. And I like the idea of a combo loan, because I think that's worth looking at as a way of addressing that risk. But my question is a slightly boring one about credit union regulation, which I appreciate will be different in the USA to how it is here. Because Terry, you said that you have 8,500 members, which is similar to a medium-sized credit union in this country, so I can relate to that. But you said that you had £45 million in member deposits and £200 million in clean energy loans. That I raise my eyebrows at that, because that is very different to the type of profile that credit unions typically have in this country. And I think if we launched new products or new credit unions with that kind of ratio, I think the regulator in this country would be a bit alarmed. And so I wondered, is that kind of ratio acceptable in the US from a credit union regulation point of view, because I think, you know, we would need a higher ratio of deposits to loans in this country, to be honest.
Well, and that's why we had the liquidity, as I mentioned that quite a bit, and we do sell our loans out on the participation market to keep that liquidity coming in. So, and we don't just sell to other credit unions. We sell to climate conscious holdings, people who are, we even had some of our own members who have purchased our loans from us. So it's kind of interesting. And then we're going to be working on some nonprofits also doing these loan purchases as a type of investment. So and I don't know if you do participation, if you participate out, and it's kind of like we have Fannie and Freddie Mac for the mortgage. So it's kind of in that area where, you know, you couldn't keep up with mortgage volume if you couldn't sell those mortgages off as well. So it's kind of the similar thing with these solar loans and such that are higher dollar. We had to find a way to keep our liquidity coming in with a demand.
And Terri, am I right in thinking that the Inflation Reduction Act, there'll be an element of kind of secondary lending or investment from an intermediary above?
Well, the Greenhouse Reduction Fund is going to be putting in about $30 billion to help credit unions and other nonprofits in areas to get more lending out to the low to moderate income communities. So we're hoping to grab some of that, and part of that money is going to, we're hoping that Inclusive can work with to put a fund together so we have a machine so we know that we can sell these out, and we could bring in more loans. But one thing you could do is you don't have to start off with these high dollar loans. You could just do like the Maryland program that we have is insulation. I mean, your homes need to be insulated, or hot water heaters or things. I mean, hot water heaters we found are 50% of some of the energy is just heating that tank of water in your home. So there's small projects that can be done that can have a big impact on comfort in someone's home. And it doesn't have to be those $90,000 loans to start with. Yeah. And the partnerships with government agencies and state agencies, if they want this, if they have goals to hit net zero, if they want to stop relying on foreign oil and gas, I mean, I know I heard in the news that there's going to be more drilling and things happening, but they need to help reduce the cost of energy for their homeowners. And they need to help them be more comfortable in their homes somehow, because I know those homes are old and there's a lot of work that needs to be done on them. And unless they're going to give, I always say, unless they're solar, unless they're going to start giving these things out for free to the people in our country, they're going to have to borrow money for them, because inflation is, I mean, it's everywhere. And I haven't seen really the wages keep up with the inflation yet.
And I'll finish with a little bit about the research we've been doing on our project about lending and credit unions. I had another question that's come in around demand. You mentioned that demand has been really, really positive, and that you've struggled to keep up with it, if anything, which is interesting. We've got similar, I think, on a different scale with ourselves, because there's very limited kind of one-stop shop provision here. But the demand, the question says, would you put that down to the incentives and grant schemes, or is there more? Is there simply a demand that's coming from your members and people that are interested in this kind of sector?
I think there's a few things going on. Part of it is, you know, the incentives that are offered, because they're, you know, someone who has a high tax burden, of course, is like, shoot, I could put solar on my home and save 30% of my taxes. So it's a great incentive for them to, you know, one, keep my energy costs down, and to get a rebate on my taxes. But I think some of the climate events has I mean, I talked about those batteries in Texas. I've never seen so many battery loans, people looking for battery loans in my life. And it was amazing to kind of see that, and we have more and more people asking about batteries because of the rolling blackouts that have been happening across our country. And and generators and things that are needed in the homes to keep the refrigerators going and things. So I think that has really helped. And areas that have had the high heat that didn't need HVAC systems, that maybe need another HVAC system, maybe they need two now, have really added more demand as well. So I think it's a mix of things going on right now.
And it's interesting you talked about the tree huggers, and then people are more interested in the financial return. So there's maybe a mixture of motivations there.
Yes, some people do it for the environmental impact, and we have a lot of members that are value aligned, and they come to us for everything. You know, they have their savings and checking here. They want to do all their loans with us as well, and of course, we only do clean energy lending, but that is their motivation. But I think everyone can kind of get around saving money, you know, and just making little changes to save money on their monthly bills. And it's important. We have a lot of people on fixed incomes, and we talk about, and it's not just, you know, when I started, I thought, oh, we're going to have, you know, it's mostly going to be these young hipsters that are going to be coming in that, you know, want to help the climate, and you know, but we find there's more and more people that are senior citizens that are on fixed incomes and are looking for any way that they can to save money on their bills. So I was amazed that we get a lot of people that are, you know, born in the 30s and 40s and stuff that are coming in to do lending with us.
That's really fascinating. And what might do there? We've come to the end of our time, I'm afraid. But I was just going to, although I think my system's blocking me from sharing. Oh no, maybe I can share now. Yeah,
sharing.
Yeah. No, there we go. I think. So yeah, that's been absolutely fascinating, Terri, and really a real interesting insight into a different kind of policy context, but also a way of non-profits and ethically motivated organizations kind of reorientating both to scale and demand. And I think there are huge lessons for us here in the UK as we start to ramp up this system, and also indeed, like, we have an election coming up next year, likely, and I think one of the key kind of areas will be around funding retrofit, funding energy efficiency, funding the clean energy transition. And I think a lot of policymakers are interested in how this kind of agenda that you see in these states is going to inform us. Just to wrap up for the audience, so our Green Homes Finance Accelerator project, as I mentioned before, is looking at how to combine one-stop shop retrofit advice with financial offering, and we're working with ABCUL and Metro Moneywise, who ABCUL's the Federation of Credit Unions, Metro Moneywise is a credit union, Loco Homes, which is a one-stop shop in Glasgow, and also Carbon Co-op, who's our technology provider on this. And indeed, we've been gathering loads of research and insights from Ireland, and the visit to Ireland was instructive around the credit union context there as well, slightly larger loans than in the UK. And we'll be sharing our insight around the consumer research, the householder research, the credit union research, the monitoring and verification tools as well as the policy context in another webinar, which will be in early October, which will let everyone who's on this call let you know about that. We'll also be sharing a blog post from Ireland, because in Ireland there's a fascinating policy context around retrofit, around one-stop shops and credit unions, and so there's a lot of learning there. And I know a lot of people on the call and outside the call have been really interested in the Irish context as well. So that's all to say. Thank you very much for coming. All the slides will be circulated and the recording. And yeah, if you've got any follow-up or you want to say hello, then please do get in touch. But for now, thank you very much again to Terri. Thank you everyone for coming. And yeah, we'll see you soon.
Thank you, Jonathan.